The ultimate guide to the stock market. The stock market is a vital part of the global financial system, enabling companies to raise capital and allowing investors to buy and sell ownership in companies. It's a platform where public companies list their shares, and investors can trade these shares in real time. The stock market is both a reflection of a country's economy and a global marketplace where financial assets like stocks, bonds, commodities, and currencies are bought and sold. 1. The origin of the stock market. The concept of the stock market dates back to the 1600s in Europe. The first formal stock exchange, the Amsterdam Stock Exchange, was established in 1602 by the Dutch East India Company to fund its voyages to Asia. Over the next few centuries, stock markets grew across Europe and North America, with the New York Stock Exchange, NYSE, being founded in 1792. 2. Buying shares. When you buy shares, also called stocks or equity, you're purchasing a piece of ownership in a company. This allows you to potentially profit from the company's success via dividends and capital appreciation. Shares are typically bought through stock exchanges, e.g., NYSE, NASDAQ, or through brokerage firms. To buy shares, you typically need a brokerage account, knowledge of the market, or the guidance of a financial advisor. Capital to invest. There are two main types of orders. Market orders. These buy shares at the current market price. Limit orders. These specify a price at which you're willing to buy shares. 3. Selling shares. Selling shares is the reverse process of buying. You sell your shares to liquidate your investment or take profits. When you sell shares, you can either sell at the market price, market order, sell at a specific price, limit order. The goal when selling is usually to lock in a profit or cut losses, but the timing of your sale is crucial for maximizing returns. 4. Holding shares. Holding shares means you own them without selling. Investors may hold shares for different periods, from days, day trading, to years, long-term investing. Investors generally hold stocks to benefit from capital gains when a stock price rises over time. Dividends, regular payouts from a company's profits. Holding stocks requires patience and often a well-thought-out investment strategy. Many investors choose to hold long-term to benefit from compounding growth. 5. When to buy stocks. Timing the stock market can be tricky, but here are some general guidelines. When the stock is undervalued. If a company's stock price is lower than its intrinsic value, it may be a good time to buy. When the market sentiment is positive. If the broader market is on an upward trend, it may be a good time to buy. During market corrections or downturns, buying during a market dip can offer an opportunity to buy high-quality stocks at a lower price. 6. When to sell stocks. There are several scenarios in which you might sell stocks. When the stock reaches your target price, you sell to lock in a profit. When a company's fundamentals change. If a company's business model, leadership, or market prospects deteriorate. When the market is overly bullish. If stocks are inflated and may soon face a correction. To diversify. Selling one stock to reduce risk and invest in other assets. 7. When to hold stocks. Holding is a strategic decision, especially for long-term investors. Here's when to consider holding. Strong long-term growth prospects. If the company's fundamentals are solid, you may want to hold for the long run. When the stock is part of a well-diversified portfolio, holding on through short-term volatility can be part of a long-term strategy. 8. Types of stocks. There are various types of stocks that investors can buy. Common stocks. These give shareholders voting rights and a claim on company profits, typically through dividends. Preferred stocks. These have a higher claim on dividends but usually don't come with voting rights. Growth stocks. Companies that are expected to grow rapidly, often reinvesting their profits into expansion rather than paying dividends. Value stocks. Stocks of companies that are undervalued relative to their earnings, with a lower price to earnings (P/E) ratio. Dividend stocks. These stocks regularly pay dividends, offering income in addition to potential price appreciation. 9. Which shares are more profitable? The most profitable stocks depend on your investment style, but typically, growth stocks, while more volatile, growth stocks in tech, healthcare, and other emerging industries can yield high returns. Dividend stocks. For those looking for steady income, dividend stocks are often more profitable over the long run, especially in stable industries. Small cap stocks. These can offer higher potential returns, but they are riskier. 10. Dividends. Dividends are cash payments that a company distributes to its shareholders, typically from profits. Investors often buy dividend stocks for regular income. Dividend-paying companies are often well-established and financially stable. Companies with a long history of paying and increasing dividends, like Coca-Cola or Johnson & Johnson, are considered solid investments for income-seeking investors. 11. Stock splits and reverse stock splits. Stock split. A company may split its stock to lower its trading price and make it more affordable. For example, a 2-for-1 stock split doubles the number of shares an investor owns, while halving the share price. Reverse stock split. This reduces the number of shares but increases the share price, often done when a company's stock price has fallen below a certain threshold. 12. Stock market hours. Opening time. The stock market generally opens at 9:30 a.m. Eastern Standard Time in the U.S. Closing time. The stock market closes at 4 p.m. Eastern Standard Time in the U.S. pre-market hours, the time before the market opens, typically from 4 a.m. to 9:30 a.m. Eastern Standard Time. Here, investors can place trades, but the volume is usually lower. After market hours. The time after the market closes, typically from 4 p.m. to 8 p.m. Eastern Standard Time. Like pre-market, after-market trading is also lower in volume and can be more volatile. 13. Other investment assets. While stocks are popular, other assets can diversify a portfolio. Gold and silver. Precious metals often act as a hedge against inflation and economic uncertainty. Precious stones, diamonds and other gems are considered alternative investments. Oil and natural gas. Commodities that are essential for the global economy and have a strong correlation with economic growth. Mining. Investing in mining companies can expose you to natural resource markets. Real estate. Real estate investments are tangible and can generate rental income and capital appreciation. Automobile and rocket stocks. Companies in the automobile and aerospace industries, like Tesla and SpaceX, offer unique opportunities due to their innovation. 14. Each company has its own shares to sell. When companies need capital for expansion or other projects, they issue shares to the public. Each share represents a claim on the company's assets and profits. Companies decide how many shares to issue and the price at which they will be sold, usually through an initial public offering, IPO. 15. Stock markets around the world. Each country has its own stock market where shares of domestic companies are listed and traded. NYSE and NASDAQ in the US, London Stock Exchange, LSE, in the UK, Tokyo Stock Exchange, TSE, in Japan, Euronext, in Europe, Shanghai Stock Exchange, SSE. In China, these exchanges allow global investors to trade international stocks, and the global flow of capital can influence stock trends across borders. 16. Stock market trends. Stock markets are cyclical, experiencing periods of bull markets, when prices rise, and bear markets, when prices fall. Analyzing trends helps investors decide when to buy, sell, or hold stocks. Technical analysis, fundamental analysis, and market sentiment can all play a role in identifying trends. 17. Enjoying stocks around the world. The stock market is a global phenomenon. Investors can access stocks in companies across different countries and industries. For example, investing in US tech stocks, European luxury brands, or emerging market utilities can provide exposure to diverse global trends. In conclusion, the stock market is a complex, dynamic environment where investors can potentially profit from capital appreciation, dividends, and other assets. Understanding the basics, from the origin of stock exchanges to strategies for buying, holding, and selling stocks, is crucial for making informed investment decisions. Whether you're a long-term investor or a short-term trader, a well-researched approach is key to navigating the world of stocks.